Oh man, is it time to start turning bullish on this market? The question is, what are you waiting for to build your conviction in this once-in-a-lifetime asset class heading closer and closer to a bull run? I just got done traveling but came straight into this studio to give you guys an update because what I'm seeing here in the charts is that Bitcoin is set to close September in the green, bucking the trend up 3.4% here, looking to close the weekly candlestick nice and powerfully to the upside. But I've got some key levels and thoughts to share with you. Now, if you've been watching my videos over the last few days, you know there are some technical things which have us worried. Yes, for example, we're moving into our weekly EMA ribbon here on the weekly chart. On the daily chart as well, we're struggling to close above our EMA ribbon here on the daily, although hopefully we can do that over the next couple of days. But we need to zoom out, and that's what this video today is about. It's about, hang on guys, when are you, from a macro perspective, going to start putting your faith into Bitcoin? Because there's one thing looking at the technicals, and you guys know this channel is all about marrying the technicals with the fundamentals and understanding the macro environment as well. Yes, we've got some macro headwinds coming. Yes, we know that the dollar index is having a moment of strength because of what the Fed's doing. We've covered that off at length. Yes, there could be more of a pullback down to 20,000, maybe 19,000, 18,000. But when are you going to join the bus? When are you going to get in the bus? Or are you going to sit there and procrastinate and then say, oh, I never get to catch all the trends? You guys got lucky. The question is, when you look at what Bitcoin has gone through, let's just recap it, guys. Let's just think about what Bitcoin's just gone through. Bitcoin had one of the world's largest exchanges collapse due to a Ponzi fraud by Sam Bankman-Fried. You had the collapse of Terra Luna with Do Kwon and the loss of one of the biggest algorithmically backed stablecoins. You had Celsius. You had Voyager. You had 3 Hours Capital collapsing. On top of that, you've had the fastest interest rate increase in many, many decades. You've had this fight against inflation. You've had at the same time regional banks collapsing at the beginning of this year. All of this in that depths of that bear market, and Bitcoin fell to 15,500 and now is sitting at about 27,000. You got to ask yourself, when are you going to get on the bus? If you think that you're listening to some YouTuber who's saying Bitcoin's going to go to zero, it's going to go to 5,000, you need to actually be realistic. Look at everything I've just listed, right? If you had said that to me and then told me that Bitcoin is still sitting here at 27,000, I'd be like, guys, that is crazy. And this indeed is insane strength for Bitcoin. Excuse my stuttering. I told you guys I've just got done traveling, hugely jet lagged here. But I've got to cover this off for you guys, right? Like, look at this. Yes, on the monthly candle, we're bouncing. Right? We've looked at the weekly and showed it, and we know it's a little bit worrying because we're getting rejected, but what are we seeing here on the monthly? If we can close this candle green, it looks like we're trying to bounce from this EMA ribbon. Very nice. The bears, as much as they huffed and puffed and had some progress, they didn't manage to close us below the monthly EMA ribbon. They didn't manage to get us below that 24,000. You guys know, for example, we've been monitoring this, right? Let me just show you this again. We've got the M pattern. Right? They couldn't play out that big M pattern. Look at this big M pattern. Neckline at 24.8. They couldn't do it. They could not finish that. Let me just show you that. They could not finish that off. We managed to hold the neckline, and we're looking to bounce it. We're trying to bounce in this direction. So as much as the bears have tried, and as much as we start to think, oh no, maybe Bitcoin will head to low price points, we've got to ask ourselves the serious question. What are we waiting for? Are you waiting for Bitcoin to get to 23 to nibble? Like, what are those a couple of, $1,000 differences going to make a difference to you? You either want to be in the market or you want to be out of the market. Because one thing I know from experience, when Bitcoin decides to move, it's not going to wait for you to get your wallets in order. It's not going to wait for you to make sure you got money on exchanges and you've saved up your DCA buys. No, when it wants to rip, it's going to rip. And every single day, week after week, and month after month, you're going to be regretting that you didn't get to the market. These are monthly candles, guys. Look at this. Once this decided to rip, let's say from here, it tried to lose the EMA ribbon. The following month here, April 2020, it decides to go. Boom, boom. You missed that out. Miss. Look at these candles, and it's done. That year to make life-changing money. And either you're going to be in the market or you're going to sit there twiddling your thumbs, procrastinating because you got caught up in the bearish narrative. Now, you guys know on this channel, I'm here to give you pragmatic details and information, right? I will tell you when things are looking bearish from a technical level, like we have done. There's no denying the fact that we could have a pullback here. There's no denying the fact that here, if we look at dollar index, it's still ripping. There's no denying the fact that Bitcoin could still get rejected from this weekly EMA ribbon and we could head lower. But we've got to ask ourselves, what is that price point you're hoping for? Also, guys, we had the all-important PCE inflation figures come in today, which are really, really bullish, coming down a notch lower than expectations. If you look at the core PCE, which strips out the energy side, remember, PCE inflation is the one the Fed like, it's the one they use on their summary of economic projections and we'll be looking at closely. It came in at 0.1% month over month versus 0.2% expected. So they were expecting the run rate to be 0.2, which is 2.4% if you times it by 12 to annualize it. It came in at 0.1, which is 1.2% annualized inflation. Very nice. If you look at the core figure on a year-over-year basis, you can see that came in at 3.9% versus the 4% price in. So nice notch down here on PCE. And this is going to give us some confidence that maybe we might not need a rate cut. Let's see what the markets are currently pricing in. 15% of the market are saying he'll use that rate cut in November. Remember, the markets are starting to price in that there will be a rate cut at some point, whether it's November or December, because the Fed kept that optionality in their summary of economic projections that we got last week. But it's not necessarily the case. They'll use it. If CPI, if PCE like we've just seen, and if jobs figures come in line before these meetings, maybe he won't use his 25 base points, and maybe where we are now, which is 5.25 to 5.5, will stay the level we are going to be at, and that could be the highest interest rate we could see in this cycle. So all to play for here, and a positive piece of macro data. I've got a little bit of cash on the sidelines that if we do fall to some of these levels, if we do, remember, I don't know, if we do fall to 24,000, if we do fall lower down to these levels at 22, and if a unique set of circumstances show themselves that want to drive us down to the market cycle lows of 15,500, I've got some cash on the sidelines. But I'm not going to sit now with all my money out of the market saying, no guys, it's going to go to 15,500 and I'm going to put all my money in the market when that happens. Do you know what unique set of circumstances it took to put us here? Everything I just listed, all that negativity, the market hugely risk off, interest rates up, inflation horrible, all these cryptos collapsing, Gary Gensler after us suing SEC, rejecting the spot ETFs, suing Coinbase, suing Binance and CZ, right? Listing many of the altcoins as securities, trying their best versus XRP and losing that. To then think that we're still sat here, right, in September of 2023 at 27,000 with BlackRock applying for a spot ETF, Van Eck, Fidelity with JP Morgan getting cozy with Bitcoin, with us trying to get an ETH futures ETF as well, with inflation coming to the downside, and we're hoping this one or two more rate hikes, and then we're done and we're paused, and eventually we need to prepare for the rate cuts. Wow. So if you're really sitting there in that bearish hat on thinking, no, I'm going to wait out. I'm going to wait for that, 10,000 Bitcoin. I'm going to wait for that 5,000. You're procrastinating. You're missing the point here. Bitcoin is sat here at 27,000. Having previously shown us a track record of getting up to here, the highs at 69,000. The risk to reward is so skewed in our favor right now. It got to 69,000 with far less adoption than we have today. If you look at the adoption we have today in terms of what I just listed, some of the more institutions and the awareness that Bitcoin has, it's come on leaps and bounds. Not to mention it's proven its security for another 3-4 years since then as well. So it's shown resilience, it's shown strength through the bear market. We've still seen adoption. We've seen institutions clamoring to jump onto the Bitcoin hype train. And now we're just sitting here at 27,000. And you're going to ask yourself, what are you waiting for? Are you going to get in this market? Are you going to have your bags locked and loaded? And are you in this market? Or are you going to be that person that sits there going, you know what, I could have got in at 22, but I had this feeling that it was going to fall to 18, so I just waited. But by waiting, I missed the bus. And that's the problem. If you can invest, this is the whole game. I'm going to give it to you right now here because you guys stayed to the end of this video. I'm going to give you the whole game. If you can stay in the market for 1, 2, or 3 cycles, you're going to become very, very wealthy. It's almost impossible that if you were in Bitcoin 3 years ago, unless you made a tragic mistake, that you're not fundamentally different from a financial perspective right now. And if you guys can do the same, if you can navigate through 1, 2, 3 bull markets, 3 full cycles of crypto, you're going to be in a very different place. The problem is the mass population, let's call them the tourists, will come into crypto at certain points. They'll come in during the peak hype at 69 and panic sell at 15,000. They'll come in at 30,000 and then dump out and get shaken out to the downside. You've got to see the whole cycle through. This is not just about crypto. This is for the S&P, it's for the stock markets, it's for gold. You've got to have the resilience to persevere through boom and bust cycles. And if you guys have just lived through this tightening of interest rates and the bringing down of inflation and all the FUD that we've had, not FUD really, because it's true stuff, the difficulties that crypto has faced from a regulatory and scam perspective, then you've made it through that tough period, and better times lay ahead with the bull market. So there you go, guys. There are my Friday reflections on this market. Nice to see Bitcoin's looking to close September in the green. Yes, there's some shorter term catalysts in the weekly and daily, which have me prepared for some lower price points. But longer term, I just wanted to sit back and remind you guys of why we do this day in, day out, why we allocate some of our funds to crypto, because we need that hedge against the traditional finance system. We need that hedge against inflation. We need that hedge against fiat currency. Hopefully you guys enjoyed. If you appreciate this type of content, smash up the likes. Don't forget to subscribe, and I'll see you in the next one.